Reserve kicking off its two-day policy meeting this morning. Investors watching for any signals on the timing of a rate cut this year. Would it be September? Fed Governor Christopher Waller is hinting at support for a cut, saying he may vote to lower the Fed funds rate, but futures traders 7% chance the bank is going to hold rates steady tomorrow. September is seen as the earliest possible move. Joining me now, former Treasury, former World Bank President David Malpass. David, good morning to you. And you say that the Fed won't cut rates, but they should.
Hi, Cheryl. Good morning. Yes, they should. We need to have growing in the economy. But you know the way that Fed thinks about it, growth causes inflation in their mind. So they see the economy growing and they think, uh-oh, that's inflation. And then they think that high interest rates can stop inflation. They don't realize that high interest rates stop small businesses and big businesses from investing in the economy. So we've got a bad model at the Fed that fights against growth. They think Trump's growth program is, by causing growth, needs to be leaned against. They liked the Biden program better because it was slow growth. And so they were cutting rates for Biden and don't want to do it for Trump.
Well, certainly Trump in this argument and the pressure he is putting on Powell, he makes a very good point, as does the administration. We've got $9 trillion over in the next year. And with interest rates high, the American taxpayer will suffer because of that. So Powell's term is up next May. We're showing our viewers the Fed renovation project. The two walked around, kind of some frankly funny moments between the two, some pushback from Powell. But the Powell that I saw on Thursday, of last week, he made no hint that he was going to budge at all. He seems that he is dug in his heels. And even the editorial board at the Wall Street Journal says the interest rate that matters is, if you look back last fall when they cut the short rate, the long bond spiked the yield. And they say Powell is being cautious because of experience. When they began that rate cutting spree last September, it was premature and a mistake that financial markets punished. David, your reaction to that?
That incident was during the Biden years, and he was regulating the economy so much that if you tried to lower interest rates without having more growth in the economy, the longer-term bond yields went up. Trump can do the opposite. By having more productive economy, more energy output, having deregulation, then as you lower interest rates, there'll be more small business lending by banks, and the small businesses will help bring prices down. Look at what China has been able to do by producing more. They actually have deflation. So it's the opposite, really, of the way the Fed thinks about it. They think it's inflation, and so they lean against growth. So we have to break fully out of that model. It's more than just changing the personnel at the top. It's changing the whole mindset of the Fed to recognize that Keynesian economics doesn't work. There has to be growth economics that welcomes the idea of more investment within the economy. I think it's going to be very over that hurdle under their current, it's not just the current management, it's the current PhD mindset of economics that's against growth.
It's interesting. Many have said that the growth projections based on these trade deals and the big, beautiful bill in particular are missing the forest for the trees. And also, you say that the inflation data is wrong. David, what do you mean by that?
Tomorrow, but that's in the GDP number. There'll be both growth and inflation, and that will inform the Fed's meeting tomorrow. So we'll see. But in general, they don't like it if the economy is growing. And on the inflation side, housing is a big weighting in both the CPI and in the core PCE deflator, the measure that the Fed uses. And therefore, what the Fed is looking at is what housing doing over the last year, not what they're doing today. They're falling in both rents and in owner-occupied housing, and the Fed doesn't pick that up in their model because they have a lagging model. Their inflation data is wrong, and it keeps them in high interest rates.
What's most important to you coming up? We've got JOLT, ADP, second quarter GDP. We've got on Friday, we've got the July jobs report. What are you watching right now?
Also on Thursday is personal income and spending, which the Fed will be watching because they don't like it when people have money to spend. I think the most important one, well, we'll see trade, I think today, it may be out right now. President Trump, is really trying to change the trade system. He should be, I think he can change the Federal Reserve system to be more pro-growth. But the biggest number is tomorrow's second quarter GDP that comes out at 8:30, and it will have inflation numbers in it that the Fed will be watching.
Okay. Before you go out, this proposal from President Trump, so he's proposing this blanket tariff, 50 to 20% on countries who still have not made it. It's ahead of the deadline on Friday. We heard from Howard Lutnick. He was on with Brett Baier last night. He said, this is the deal. Friday is it. And a lot of these leaders in Europe have been critical of the deal. In fact, the European Commissioner for Trade called it, she said, the best deal possible under very difficult circumstances. But you've had others that have been critical of the trade deal, and they don't like it. Fair enough. Now you've got the U.S. and China talking in Stockholm. That's also underway today. That could be an extension of the August 12th deadline. Fox Business, by the way, can report that the talks are making progress. But at this point, David, it's slow going. So with this talk of Chinese, where do you think we're at right now with this?
Everything you said right there sounds good for the U.S. Having complaints by foreigners about the deal is the definition of a deal that probably will work. We've seen Japan, Philippines, Indonesia, the U.K., and now the EU that work for the United States. And so I think it's fine. China is going to be problematic, but they have to see what's going on, that the world is moving toward the U.S. in terms of the trade arrangements, or they're moving away from the bad imbalances that were in the past. All of these are hard to come by. The details matter. Steel and autos are still, being worked out, and I'm sure China will fight back with critical materials and so on. So what we need is a big change in the trading relationship, and I think that's all going on.
Yeah, fentanyl security, which is something else that, whether it's with regards to Taiwan or the relationship between China and Russia, it's not just economic here. There's a national security component as well. So I understand what you're saying about the complexity of the deal. David, real quick, I got to go. Yeah.
That's right, Cheryl. Small businesses and the supply chain in the U.S. will be key in national security and in growth, and the Fed has to stop leaning against those.
All right, David Malpass, always great to speak with you, David. Thank you for being here.